continues to be a red-looking screen. The Nifty is down 70 points. We have the mid-caps, which are absolutely flat, but with some negative bias. It's the auto index, really, that's putting some pressure. So the likes of Bajaj Auto, all these stocks, they are lower in trade. We also have M&M, which is lower right now as we speak, and Reliance Industries, too, down 1.4% at the day's low, which is putting some pressure on the Nifty. But we'll do one thing, we'll slip into a break, and as we wrap on the show today, let's bring you a CNBC-TV18 exclusive. Speaking to Shereen Bhan, Cognizant CEO Ravi Kumar sounded optimistic about the company's outlook for the next few quarters. He also spoke about the rise of AI and how the company is navigating geopolitical challenges. Listen in.
Almost 2 years of steering the company through a turnaround plan. We've spoken about this previously, but at the end of 2 years, how confident do you feel about being able to meet the targets that you had set out for yourself and the turnaround of Cognizant?
Thank you, Shereen, for the opportunity to talk to you again. Very excited. I mean, if somebody said this is what I would get at the end of 20 months, I would take it. I had broadly set up 3 goals. One, to simplify our operations. So we've done an extremely good job of simplifying it. The second is to create commercial momentum. And over the last 18 to 20 months, we've created some amazing commercial momentum with large deals. Last year, we closed 17 large deals, more than $100 million. And for the first half of this year, till Q2, we closed 13 of them. So we're in a good spot there. We've got our clients back. The mojo of the company is back in the market. We're winning. And I do think that we are progressing well to be in the winner's circle, which is where this company deserves to be. I mean, in the 25-year history of Cognizant, since its listing, for almost 21 to 22 years, we were in the winner's circle. On employees, which was my third important priority, to be the employer of choice, I also said this, that we should be on a virtuous cycle of clients and employees. And if we are on that cycle, it's an easy business. If you're not on that cycle, it's a hard business. Our employees are starting to feel very positive about us. Our attrition rates are on an all-time low. When I started this stint, it was pretty high. Of course, the labor markets were heated up as well. In a decent labor market, our attrition rates are very low. Interestingly, we have changed the paradigm of why employees should be betting on Cognizant. And the things which I'm excited about is the learning opportunities on the platform, the ability to create internal mobility. You and I spoke about our diversity. We have 40% diversity in our workforce with women, which is the highest in an industry where the average diversity ratios are 36%. And over the last 2.5 years, we have actually promoted 35% of the employee base in India. So they've either gone a promotion or they progressed in their careers. So I'm kind of super excited about where we are. I do believe that Cognizant's heritage of entrepreneurship, working at the intersection of industry, domain, and technology, and a big, small company we are. I mean, we are a big, small company, very agile. I think I've kind of drawn from that heritage and invested into the future to stay relevant.
Well, you talked about 25 years of listing for Cognizant. We're marking our 25th anniversary here at CNBC-TV18 as well. But Ravi, talking about the commercial momentum to get back into the winner's circle, and I understand that this is your silent period, so you cannot talk specifics. But what is the sense that you get in terms of demand at this point in time? Is the environment looking less challenging today than it was a couple of quarters ago? The deal pipeline continues to look as strong as it did in the quarters that you just spoke to us about. What's the sense that you get about being able to amplify on the commercial momentum that you have now got?
So Shereen, I'll talk to you till end of Q2, which is the results we've announced, and we're yet to announce the Q3 results. Till then, I do believe it's a very complicated navigation. It's a navigation on one side with a period of uncertainty, a significant period of uncertainty, the geopolitical situation around the world, and a period of change because of AI. And in some ways, navigating the two is the most important. Normally, for the change we are anticipating in AI, we should have seen a capex cycle trigger off.
Yeah.
That didn't trigger off because there was uncertainty. So smarter players, what they're really doing, and we have applied that template, is the ability to take cost out, the ability to have high productivity, the ability to give a value proposition for consolidation, use those savings and underwrite it for change. I mean, that's what we have done.
Right.
And that has enabled clients to not trigger the capex cycles, but also invest in the future.
But do you feel the need to take more costs out? And do you have the ability, for instance, to take more costs out?
I mean, with the advent of AI, I genuinely believe the cost of technology deployment will go down. I mean, you know, if you look at historically, if you see two big waves which have happened on cost takeout, the first is when offshoring happened in the 90s. When that happened, really what happened was as deployment cost of technology went down, the amount of technology spend went up because of the elasticity.
Yeah.
When the cloud happened, the plumbing to building ratios changed. Plumbing was 70%, 30% was building. That ratio turned on its head. 70% became building and 30% plumbing. The cost of technology went down, the cost of deployment of technology went down, and the spend of technology went up. With the advent of AI, which is uniquely different, because what AI is doing is not just impacting workers at the bottom of the pyramid, but also impacting knowledge workers. As AI will increase the productivity, I do believe technology spend will actually increase because that same elasticity is there. And as you deploy technology at a lower cost, it will actually lead to higher technology